right? So we are going to create allowance, and this is this expense. This allowance will go to balance sheet, and this expense will go to income statement. So it's coming on our coming slides as well. Here we go. So in order to understand that, let's understand this with an example. So I'm gonna just, let's do it together. So percentage of sale method, so assume it is September 29, 2012, and Apple Incorporation accounts have these balances before the year-end adjustments. So they have $11,028 as an account receivable, and they have allowance as $10, not $10, 10 million. Okay, so suppose Apple credit department estimate that the uncollectible expense is 0.005 of the total revenue. 0.005 of the total revenue, and the revenue is 156,508, right? So how much is the uncollectible account entry? Simple. 1%, sorry, here we go. 1% or 0.500, you see here, they already mentioned that 0.005 of the total sales. 0.005. It means they expect that their uncollectible is going to be 78, right? Then what would be the entry? So they send this expense to income statement as an expense, and on balance sheet they will send this amount as allowance. So let's talk about this entry. Entry going to be uncollectible expense to allowance for uncollectible expense, right? Understand? Uncollectible expense, expense increase, debit. Allowance for uncollectible expense, they increase because this is a contra account. Contra account increases, credit, right? Okay, guys, you understand that? So,
Yes.
how we are going to account for it as so when we are trying to create allowances, we need two accounts. So for example, we created for this $78 million. So we create two accounts. Number one, expense, and this is allowance. So allowance is a contra account. It means when it increases, it's credit. Expense increase means debit. So entry would be expense to allowance. And which expense? This is uncollectible expense to allowance for uncollectible. 78. This Jumu blackboard is so horrible. Okay. So let me show you here. So can you see a slide here?
Yes, sir.
Okay. So you see that? So entry is allowance expense to allowance for uncollectible. So previously you have $10, 10 million in the account, and now due to this entry, because this is contra account, so you see a credit size increases, and you create a new balance account that is uncollectible expenses 78. So what is the net receivables or net realizable value? So 11028 minus this 88 is going to be 10,940, let's say.
Wait, what is the 10? Could you go back for a second? What is the 10 and the 78? Oh, right, 78 is what we calculated. What is the 10? Where did the 10 come from?
This is 10, this is the previous balance. At the start of this question, they mentioned that this is, here we go. Yeah. You see that here? So this is the previous balance. If not, then it's the 0, 1. But since it's already there, so it's a balance here. So don't you worry, it is the opening balance, you can say now. Okay? Now the allowance method, the second one is aging of receivable method. The concept of aging is that, again, I think I use this Microsoft widescreen, that could be very handy. So the aging is basically aging of receivable. The concept is like that. Longer the period, more chances of uncollectible. Okay? So the risk of default or risk of uncollectible is higher for the account receivable amount that is pending from 90 days, less in 60 days, and less in 30 days. So you allocate some kind of percentages. So where this percentages came from, that is a pure mathematical method we are not going to discuss here. Good thing is that you will be given these percentages, and all you have to do, you need to multiply this according to this 30 days account receivable. So in 30 days, for example, we are collecting 9,000 in 30 days. The chances of uncollectible is 1%. It is 90. So in 60 days, we are collecting 3,000. The chances in 60 days of uncollectible is 60. And in 90 days, we are collecting 1,000, and chances among this 1,000, 4% are that it's going to be defaulted or it's going to be uncollectible. So total uncollectible are 190. Easy, right? So you need to focus on how much amount and how much is the percentage of uncollectible regarding the aging. So you basically aged your accounts receivable. So your total accounts receivable are 13,000. Among that 30,000, 190 is uncollectible. And how you calculated this 190? You aged your account receivable according to months. You can also age according to 15 days, according to weeks, whatsoever is the method. Okay, you can do that. So let's go towards the example. It will further clarify our knowledge here. Here we go. Assume it is September 29 and we have account receivable and allowances. Balances are here. So the exhibit shows that on 29th of September, the gross receivable total 11,028. Of this amount, the aging schedule shows that the company will not collect $98. How? Like this. Basically, they aged all the amount of 1102, and if you forget 1102 is coming from, this is the balance, exactly this balance. So they divide this balance according to its collectibility. We call this aging. So in 30 days, they are receiving 10,164 in 30 to 60 days, 31 to 60 days, they are receiving this 600 in 90 days, and over 90 days, they are receiving 64. That's how this total amount came from. So, according to our percentage of sale method, we calculated the 78, right? 0.0005 of the sales. But here it is 98. Right? Look at the magnitude of this allowance for uncollectible. So which one is more accurate? Aging of receivable, because you know that the longer time period you allow for a person to give you money, the higher the chances of default, higher the chances of not paying back. So this is more realistic approach, right? But the question, it's different from time to time. If you are only given the percentage of sale method, then you allow this one. Plus, it is more costly as well. You need caliber person, those who know the accounting. So you also need to pay higher salaries for that one. So big companies use aging. Small companies, they just use percentage. That's it. So where this 76 came from? So you know that this would be given to you. There's a complete mathematical procedure to calculate this 0.75%, 1%, 5%, 10%. But at this beginning level, you would be given that. So in 30 days, only 0.75% is going to be bankrupt. We just multiply this with the amount that is going to be received in 30 days. So this is 75 point something. So we just make it round, that is rounding figure 76. 1% of 600 is 6, 5% of 200 is 10, 10% of 64 is 6.4, which is rounding figure is 6. So now you understand that this 98 coming from? Everyone?
Yes.
Right, Ajim, David, Chloe, Arone?
Yes, sir.
Yeah, we just multiplied and added.
That's
Right.
it. So
Yes.
you would be given
Blown up.
this uncollectible amount. That's it. Now the real part is that the aging method will bring the balance of allowance to needed amount as determined by the aging schedule, right? So in our percentage of account method, right, we found out that the allowance 10 was the beginning balance and 78 we calculated, so total is 88. So this aging schedule will give you this